Good afternoon from the Shreveport office of Eagle Financial Management Services for another edition of the Jack and Bill Show. How do you like our background here? We're doing this today from the rising metropolis, the downtown business district, giving you guys a new look. It was a wild day on Wall Street and another wild week. The Dow Jones climbing 248 points, or call it 0.83%, to breach the 30,000 level again, making an all-time high record of 30,218. The broad market all the way across the board. NASDAQ was up 87 points, or 0.75%. The Russell 2000 small cap index up sharply, nearly 2.4%. Huge gains there. S&P 500 gaining 32 points to close at a new high, 36.99, just shy of 3,700, up about 1.6%, Bill, on the week. And that's after having a down day on Monday and then lots of vaccine news out there coming from BioNTech, Pfizer, Moderna, and Johnson & Johnson's likely going to be in the hunt here in January. What this means is, and we're seeing this rotation with this, with stocks, small caps doing very well today, and cyclical stocks and value stocks, rotation out of some of the high-flying NASDAQ names and into financials, energy stocks today. Speaking of that, West Texas Intermediate, Bill, up 0.9%, or 41 cents a barrel to close over $46. Gold was down a fraction at $18.40. Silver up a little bit, 20 cents an ounce to $24.29. Still about half of where it was back in 2010. So the S&P 500 made a new high today. The dividend yield is now down to 1.54% on the S&P. So now on a total return basis, we're up over 16% year to date. November was a huge month for the U.S. stock market. One of the best months we've had since 1987. Safe havens, the Treasuries market has sold off sharply. Rotation out of bonds and into stocks. The only game in town, with the 10-year note climbing to just about 0.97%. So we're very close to that 1% level again, and the 30-year yield climbing to 1.74% approximately. So what do you make of all this, Bill?
No, I think it's terrific. And a lot of the things that Jack just mentioned are themes that we have been discussing for months, notably the rotation out of growth and into value and cyclical names, and the impact of vaccine news on the markets. And just as we expected, we're seeing this play out. So not a surprise.
Okay. Well, I see you have some notes over here, William. What do you have for us today?
I was really thinking about three conversations, that I had, two today and one yesterday, and it got me to thinking about the relationship that clients have with a financial advisor, and just the importance of that, and having someone to talk to, having someone whom you can trust. And there's a number of things in this that I would like to share, because we know that we have people in the audience who are not working with a financial advisor, or perhaps are, but don't really have the confidence in that relationship. And I guess you could say it kind of boils down to the role of advising versus selling. And, it begs the question, do we exist to serve our clients, or do our clients exist to serve us? And if someone is, advising in a professional capacity, really looking out for the interests of the clients, then they have to see themselves as serving the client. And that's what everyone should expect from a financial advisor. But I think all too many times uh, there are people in this business who see the client as there to serve them the other way, and it shouldn't be like that. We have said to our audience in the past to explain that we are fiduciaries as a registered investment advisory firm, meaning that we have a legal duty to put the interests of the clients ahead of our own interests. And how you do that, well, there's a number of things. There are a number of interpersonal skill sets that are really required to do that in a very effective way. And I'd say that one of the most important skill sets for anyone giving advice, whether it's financial advice or legal advice or healthcare advice, what have you, is you have to be a good listener. And that means listening first and speaking last. Or I could say to someone in this industry, shut up and stop selling. I think that we see too many times, financial advisors being so quick, to make the sale, that they're not really listening. They're not really gleaning what's important to the client. And I was, thinking specifically of a conversation that I had with one of our clients, and she may even be watching. But she had reached out and to me, and there were a number of things that have been of concern to her, and she really just, at the end of the day, needed someone to talk to. And you know, Jack and I, we wear a lot of hats, and sometimes we have to wear the counseling cap, and that's that's part of what we do, is just being there to listen. And a lot of times when people are making financial decisions, there's not a financial cost benefit behind the decision making. We're human beings. And, what feels right to us, what gives us, the peace of mind, may have nothing to do with wealth maximization or tax minimization. The driving force behind that financial decision, it may be something totally irrelevant. Maybe it's just doing something out of kindness, helping someone out, whatever that may be. So I'm saying that, to our audience, to say that if you are looking for a financial advisor, or if you have one already, you should have an expectation that that individual will be a good listener. And today I had a conversation with a lovely lady who is relocating to this area, and she wanted to schedule an appointment to talk about her financial situation and to discuss a variety of things, from financial planning to estate planning to taxes and a number of things. And what we did decide is, we were going to, have a meeting, and we would involve other professionals. And in doing so, being willing to consider this team approach to problem solving, it's really an acknowledgement of our own limitations. Here at Eagle Financial, we have a broad skill set, and we have a deep skill set in certain areas, and it's the deepest when it comes to asset management, investment management. But if we need to, we will certainly team up with people outside of our firm, and that's important because we don't have a lock on good ideas, and we're not experts in every field. And I was thinking about, that quote, to a man with a hammer, everything looks like a nail. I think that's so applicable, to our industry because we do see many examples of abuse of that. Take for example, and I'm not picking on the insurance industry, but I'm just going to use this as an example. If someone is an insurance agent, but they're not, licensed to sell securities, their solutions will be insurance solutions. And, they may not even be willing to discuss non-insurance solutions because they cannot offer those. So they're just going to treat every solution as well. Here's that nail, or here's that hammer I have, and it's an insurance hammer. So every problem that I see it's a nail for my insurance hammer. But you could say the same about securities representatives, being unwilling to consider insurance solutions. So I say all that to say that there's a lot of things out there that should be considered, and a trusted advisor should be willing to acknowledge, hey, this is not my area of expertise, or I think that we could do a better job serving you if we partner, with some other people, with expertise in different areas, or even better, what if that financial advisor were to even say no and decline the engagement because it's just not a good fit? Now, that would really be acting as a fiduciary to a client, wouldn't it?
Yeah, I mean, we run across that from time to time. There are, many that aren't a good fit. So,
So, if you are looking for help, okay, we all need help. We can't live this life alone. In fact, this broadcast studio wouldn't even be here without help from the man behind the camera, who we acknowledged last week, our good friend Wesley Roderick. He helped us put this together. So if you are looking for help with your financial situation, your investments, what have you, you should have an expectation that whomever you're dealing with is looking out for you and
yeah,
will be
think
a
of it
listener.
really as partnering with us.
Exactly.
So we want to be very thorough in uncovering what any kind of asset management is for. What your income needs are, the need for preservation of capital, liquidity needs, time
Hmm.
horizons, willingness to speculate, in a few areas. Those sorts of questions. What are your return expectations? Um, Risk tolerance, all these things. And it's very different for every individual
That's
that we
right.
help.
That's right. And we do see in the industry a lot of cookie cutter approaches. Um, a cookie cutter is convenient, but not everyone needs the cookie cutter approach. There has to be an ability to offer customized solutions, for certain people.
I don't really need the cookies either, Bill.
I don't need the cookies. But anyway, that's what I had on my mind. And if anyone out there, would like to give us a call, we will be good listeners, and you are welcome to write in, call in, message us, and we will be happy to tell you what we think. And we're not going to charge you, for that initial consultation. So we welcome those inquiries.
Yes, that's good. And yeah, Bill, I thought we have had a very busy day, a very busy week. Uh, on a sad note, I had to go to a memorial service today for an Air Force colonel client who passed away. He lived a long life, a wonderful gentleman, phenomenal sense of humor. He was an Air Force pilot, and we went out to a beautiful spot out near Keachai, Louisiana, at the Northwest Veterans Place out there, and it was a beautiful service or ceremony. But this is sadly, as we come to this year's calendar end, we have three clients that we've lost to COVID-19. All three did, live a long life, but also wanted to say, if you think about this, we've had we have a tug of war going on right now, William. The tug of war is this pull right now with expectations and fear about this pandemic and the rise in cases that we've seen, and it's very divisive to even discuss this. I saw in today's Wall Street Journal pictures of people in Boston, where they've shut everything down and making it worse, that they believe the whole thing is a hoax and don't even believe in it. So there's just a wide range of thought here. The other side of the tug of war, is the belief that we're soon going to the end is near, with herd immunity approaching and all these vaccines coming out. So the combination of a higher percentage of Americans, or the world population, catching this thing and then getting vaccinated against it. So that's what's been causing news about, from both ends of this tug of war, has caused the markets even this week to start out, down Monday and then, climbing now. But, a little practical advice I might throw in there. Bill and I gave a seminar yesterday, and it's entitled 60-20-20 is the new 60-40, a modern portfolio twist for current times. One of the things that we discussed about this is, how the Federal Reserve has pushed interest rates down to zero and tends to keep them there. And it's made the stock market the only game in town, pushing valuations with the markets making new highs today. S&P 500 is selling at about 41.5 times trailing earnings, about 26 times current earnings, and the NASDAQ market selling at over 31 times current earnings, and the long-term historical average is just a little more than half that. Mm-hmm. So we think it's a very good time right now to. It's not a good time to be jumping in with both feet and trying to get on board as the market makes new highs. What we would do, for example, for a client that has 50% bonds and 50% stocks, we're looking to, as the stock market moves higher and those percentages get out of whack, we want to bring them back to the original client allocation that we came up with when we very attentively listened to what their goals and objectives are. So we are rebalancing out of stocks right now and back into bonds, but we're doing the bond portion in a way, I just told you that 10-year treasuries yield less than 1%. We were buying bonds today that come due in 3 or 4 years or less and yield 7 or 8%, and they're considered high quality investment grade. So we've got our 60-20-20 has a twist on short-term high quality fixed income in the credit markets, and the other 20 is includes alternatives to traditional stocks and bonds, and also the 60 part of, call it the S&P 500. We're changing that up to include stocks that sell at smaller capitalizations, lower valuations, lower PE ratios, more economically sensitive stocks, financials, things like that. And so we're doing things a little bit differently. And if you would like to have an overview, if you'd like to have us kick the tires, so to speak, with your portfolio, or come in and have a conversation with us, we welcome that.
Absolutely.
So what else would you like to add, William?
I'll just add this. The markets had a spectacular November, and certainly, we love to see the markets doing well, but at the same time, we have to balance that out. When you see the markets hitting all-time highs like they have been, and you have a better understanding of why that has been occurring, it gives you some pause. You have to be careful not to let your emotions drive your investment decision making. And right now, it'd be very easy to, as Jack said, jump in with both feet, bathing in the euphoria that the markets have been experiencing. And if you do that, you may be getting in at the worst possible time. See, there is a trade-off, and there's something very powerful in finance called reversion to the mean, and that's referring to averages. And so anytime you see market returns greatly exceeding their long-term average, historical average returns, you can expect that going forward, you will see lower returns, even corrections, to get us back to that trend line. So everything is expensive right now for the most part. And because people are buying at elevated prices, their expected returns going forward off of those investments will be lower.
You could say that the market is definitely priced for perfection.
Absolutely.
In here, and we're in a time that does not seem to be perfection.
No.
I mean, we're COVID-19, the pandemic, economic calamity, businesses closing right and left, think restaurant industry, entertainment industry, an inability to gather together, as what normal human beings do, and election volatility. One of the things, this might be my last remark here, but I'm going to go out on a limb here and make a broad prediction. But we believe that that the financial markets like gridlock and a divided government in Washington, and if the Republicans lose the two Senate races coming up in Georgia on January the 5th, I think that the markets would pull back significantly. So so that's one of the things to watch. And but we would say, if your portfolio's gotten out of whack, the prudent thing to do is to rebalance. If you'd like some help with that, give us a call. And
But here's the thing. You may not even know your portfolio's out of whack.
That's right.
If you load it up on Tesla and you're up 600% year to date, to the average investor, you may see nothing wrong with that. I mean, that's a great investment, right? Let's keep adding to it.
Even if you own long-dated bonds.
Sure.
Long-dated bonds have done terrific this year. Now, they haven't done terrific since the end of September. And we think that the future is going to be more like what we've seen in the last 2 months.
So be vigilant.
Well, I think that's a wrap today. for the Jack and Bill show. We will be live again next Friday. So have a great weekend. Make good decisions. Stay dry and warm. And we'll see you next time.